Jumping into today, we are going to talk about a very hot topic out there in the wide world of mortgage and real estate. And that hot topic is rates, rating the rates.
Yeah, what are rates doing these days?
Anybody want to take a quick guess? They're going up. Rates, my friends, are going up. So we're continuing the conversation going into 2022 that was started and kind of put on hold there during the Christmas holiday. It was quietly just kind of
hanging out,
yeah. Right? We were just in this, we're not going to do much in the mortgage-backed security market, and in the federal eyes, they were like, well, inflation's coming, so we're going to have to adjust some rates. And it really went quiet.
I think the only things that were happening during that period was Santa was busy. Santa was busy. Omicron.
Yep, exactly. They were getting after it. So then I think the markets decided to go out on a bender, because from December 31st to today, the 11th of January, 2022, rates have just deteriorated. They have gone up, up, up every single day except today. So they're slowing down, they're tapering a little bit, but we really, for the last week and a half, have just been walking down the hillside, and it's borderline, it's borderline cliffside. But anyway, what is driving all this? Consumer price index, inflation fears, and the big thing that I want to talk about here and Rate the Rates today is short-term interest rates, right? So prime interest rate is something in the crosshairs of the Federal Reserve, and those crosshairs are saying, hey, we're going to have to raise these short-term interest rates to slow down the economy and to get the inflation issues in check. And now, when we look at the Federal Reserve has 12 members, and most of them vote, not all of them. I want to say, if I remember right, 8 of them vote.
Yeah, I was thinking it was 8.
And what they're debating right now is, should rates go up 2 times this year, or should rates go up 3 times this year? So what they're really referring to is the short-term interest rates. Everybody wants to calculate that and say, oh, it's mortgages. Mortgages are part of it, but they're not the exact interest rate for interest rate increase, right?
They don't mirror each other perfectly.
They're not exactly proportionate. That's what I was trying to find. That was the word I was looking for. They're not proportionate. So as they go up, they will require your attention in the mortgage world, because the mortgage world will kind of keep moving up with the short-term interest rate market. My big shout out for everybody out there that has 2 particular things maybe in their wallet or tied to their house. If you have short-term credit, and I refer to credit cards as short-term credit lines through your bank as short-term credit, those are going to be directly impacted by the prime rate, right? So they're all derivatives of the prime rate. So if you got that home equity line of credit out there for $100,000 because you put in a banging new kitchen, awesome, good job. I love that you're using your equity to build your house out the way that you want it. Just know that when they say, hey, come this March, that we're going to take the interest rates from 3.25% up to 3.5%, you're going to see an immediate April adjustment to your mortgage payment on that home equity line of credit. Same thing with your credit cards, guys. Credit cards are tied to the prime rate. So it's a great time. Rates are going up, but it's a great time to debt consolidate. Get rid of those high interest credit cards, because with rates being right now, Freddie Mac is my go-to resource. So Freddie Mac says rates today are 3.22% with a 0.7 discount point, which means whatever your loan amount is, you're going to pay 0.7% in an origination charge, a discount point, to get that rate, right? So the cool thing about that is that's still considerably less than a credit card. It's still considerably less, more than likely, than your home equity line of credit. So it's a great time, though rates are going up, it's a great time to look at refinancing and getting that cash out, because everybody's sitting on a ton of equity right now. Don't be locked down by all that high interest debt. Go get it paid off. There's no shame in it. So that is Rate the Rates today.